Namaste, good morning. The next area of focus in international taxation is taxation of non-residents. Okay, the next importance to transfer pricing is this particular chapter, and what we are going to study in this chapter. We are going to study on the residential status of the assessee, scope of total income, special rates of taxes for non-resident, presumptive taxation, exempt income, and special provisions for unit located in International Financial Service Center, IFSC, International Financial Service Center. So basically, the importance there in the first four arenas, okay, generally we'll have an idea about overall things. First, to know who is a non-resident is important. Who is a non-resident? Depending upon the status of the assessee, individual, HUF, firm, AOP, BOI, company, and other forms of AJI, artificial juristic persons, the method of determining whether a person is a resident or non-resident is varying. First, in this the most important is company in our level of study, and then the important thing is individuals. Section 6.1 says, in the case of an individual, how to determine the residential status. The, 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 the provision asks us to test two conditions. The provisions ask us to test two conditions. Each condition has two sub-rules. The provision asks us to test two conditions. Each condition has two sub-rules. Basic condition, 182 days or more during 21-22 for all of you. 182 days or more during 21-22. Second basic condition, 60 plus 365. 60 days in 21-22, 365 days in the 4 years preceding 21-22. Okay, 60 days during 21-22 and 365 days or more in the 4 years preceding the relevant previous year, which are 1920, 1819, 1718 and 1617. In this 4 years put together, 365 days or more, then a person becomes a resident by satisfying one of the basic condition. By satisfying one of the basic condition, a person becomes resident. Then there comes a concept called ROR, RNOR, NR. Okay, OR, or rather, then there comes a concept called RNOR. But by satisfying one of the basic condition, the R is obtained, resident. And if a person is not satisfying any of the basic condition, he becomes a non-resident. If he does not satisfy any of the basic conditions, he becomes a non-resident. Okay, he becomes a non-resident. Then comes the exception to basic condition 2 and the amendment that took place in Finance Act 2020. There is an exception to the 60 plus 365. For some category of assessees, I am repeating, for some categories of assessees, I don't want the second condition to be tested. For them, only basic condition A, basic condition B is not applicable for them, exception to basic condition B. Three categories of assessees falls under that. Individuals leaving India for the purpose of employment outside India. Repeating, individuals leaving India for the purpose of employment outside India. Second, persons of Indian origin visiting India. Persons of Indian origin visiting India. Third, member of a ship crew. I am repeating, three categories of persons are exempted from condition B. Three categories of persons are exempted from condition B. In other words, I will test only condition A for them. Who are all that? 1. Persons of Indian origin visiting India. 2. Individuals leaving India for the purpose of employment. And 3. Member of a ship crew. In all these three cases, we will not have the second condition tested, or the second condition is exempt. Okay, right? For these three categories of assessees, it is exempt. For all others, it is taxable. For all others, both the conditions should be tested. Now, Indian citizen or person of Indian origin visiting India had an amendment in the last year, in the Finance Act 20. If their total income exceeds 15 lakhs, if their total income other than income from foreign sources, if their total income other than income from foreign sources exceeds 15 lakhs. So basically, if I go for scope of total income, okay, scope of total income divides income into four. Okay, income received in India. This is an Indian income. Income accruing or arising from India. This is an Indian income. Income accruing or arising from outside India and received outside India. This is a foreign income. This is a foreign income. There is a third category which will fall like this: profits and gains from business or profession which is outside India but managed from India. Okay, this is tricky in the sense for ROR and RNOR, it is Indian income. For NR, it is foreign income. In other words, for ROR and RNOR, I will tax them for this. For NR, I will not tax them for this. Income, profits and gains from business or profession, which is wholly outside India, but managed from India. Let us take all the subsidiaries of this Indian company which have employees on site recruited there. All the subsidiaries of Indian companies. Let us say that Infosys has Infosys US Limited, because if an employee is transferred from Infosys India to US some on-site project, they transfer him as the employee of that company. CTS has, TCS has, HP has, every company has. So, but the company is managed from India. Leaving that company as an format, if it is managed by an individual. Okay, profit and gains of business or profession which is outside India but managed from India. In the case of ROR and RNOR, I will tax them. In the case of NR, I will not tax. So, when I say Indian income, I will include A, B, and D. I will include A, B, and D. When I say Indian income, I will include A, B, and D. Are you clear? Okay. So the law says that is any Indian income is taxable. In the case of Indian citizen or person of Indian origin who is outside India, visits India, then such person will become resident if the following conditions are satisfied. The total income of such person exceeds 15 lakhs, then instead of 60 days, it becomes 120 days. Instead of 60 days, it becomes 120 days. Okay, for them alone, because many people are trying to escape from this provision. By 182 is a very longer date. So they are here for 5 months, 5.5 months, and then go and outside stay in. They are restricted to 4 months. Okay, not a big adjustment except a deemed citizen only is a bigger thing. Okay, additional conditions. Out of 10 years, at least 9 years he should be non-resident. Who is a non-resident? One who has not fulfilled his basic condition is a non-resident. And out of 7 years, he should be in India for less than 2 years, not continuously, 730 days or more, okay, if he is in India. So, rules of determination. If he satisfies the basic condition, R. Also satisfy additional condition, OR. Does not satisfy additional condition, NOR. And if an individual does not satisfy the basic condition itself, can you be a resident of more than one country? Yes. Can you be a non-resident in all countries? That is also possible. Please understand, as much as you can be a resident in more than one country, there is all possibility you are not even a resident in any of the countries. You are not even a resident in any of the countries can also be plant. So came a concept called a deemed resident. Section 6(1)(a). Section 6(1)(a) applicable only if 6(1) is not applicable. 6(1) is direct determination. Okay. This provision is applicable only for individuals who are citizens born in India. The total income should have exceeded rupees 15 lakhs in the previous year. Such person is not liable to pay tax anywhere outside India due to his domicile or residential status. Then I ask him to pay tax in India, treating him as an RNOR. Treating him as an RNOR. Repeating, he is trying to escape from the taxation. He is planning in such a manner. He says 90 days in per country in 4 countries in the last year. So there is all possibility he is escaping from the taxation net by not being a resident of even one country. He is a citizen of India, born in India, not a resident of anywhere else, India or anywhere. Okay, then I am going to tax his income in India, provided the income exceeds 15 lakhs. Okay, provision is applicable only for individuals who are citizen and for whom 6(1) is not applicable. Income should have exceeded 15 lakhs and he is not paying any tax outside India due to his residential status or domicile. Then pay tax in India. Am I clear to you? Am I clear to you? He is known as a deemed resident. He is known as a deemed resident. Okay, right? Meaning of what is tax liable to be paid is given in this year's law. Okay, liable, because I use the terminology. Such person is not liable to tax anywhere outside India. The law has this year defined what is, last year the amendment came, this year liable to tax in relation to a person and with reference to a country means that there is an income tax liability on such person under the law of such country for the time being. Also includes a person who has been subsequently exempted from such tax liability. Okay, why this provision? Because the biggest blow came to people in Dubai, Middle East. They are not paying taxes outside India because there is no income tax. Because there is no income tax. So are they taxable in India? No. Okay, if they are exempted from tax liability under the law of that country, it is not taxable. Okay, right? Quick read through of individuals. Venki online la irukka. The temperature level is different. HUF does not have anything different from individual. I mean, HUF also has two conditions: basic condition, additional condition. Basic condition is for the family. Additional condition is for the karta, the head of the family. Repeating, HUF also has two conditions. Okay, if the control and management is either partly or wholly in India and the karta satisfies the additional conditions, ROR, karta not satisfying the additional condition, karta being an individual, RNOR, if the control and management is wholly outside India, NR. Firm, AOP, BOI, control and management is the only factor which we saw in firm also. Control and management partly or wholly in India. One partner in India, one partner partly in India, then resident, otherwise non-resident. Otherwise non-resident. Shall we? Shall we? Now I'm entering into one of the most questionable areas in residential status for final. That is how to determine the residential status of a company. The popular concept of place of effective management. Place of effective management. A company shall be treated as a resident entity if it is incorporated under Indian law. There is no doubt about it. I am not bothered where they are being managed from. If a company is incorporated under the Indian Companies Act, all such company becomes resident company. All such companies become resident company. Am I clear to you? Okay. Second, if the place of effective management is in India, the terminology that they use for HUF, for firm, for AOP, BOI, AJI is control and management. The terminology that they use for company is place of effective management. If the place of effective management is in India, then the company is said to be in India. What is place of effective management? Is the company's active business is in India or the active business is outside India? ABOI, active business outside India, then foreign company. Active business is in India, then Indian company. Okay, how do I determine that? It is determined by two means. One is board meetings, another by operations. One is board meeting, another is by operations. So coming back to something which I told you that I will ask you today. Country by country reporting is specifying the following to be reported: revenue, assets, employees, tax. From there, POEM concept is derived. How do I say that the company is in India, even though, the place of effective management is in India, even though the company is incorporated outside India? First thing to remember, if the company is incorporated in India, then we will not check POEM. Only for a company incorporated outside India, POEM is a concept. A company is incorporated outside India. How will I check POEM? If 50% or more of the income arises outside India, then the active business is outside India. More than 50% of the revenue is from outside. I am defining when will ABOI will be satisfied. Active business outside India. I am as per law. I am not defining the other way. That we can understand by doing this. If 50% or more of the assets are located outside India, if 50% or more of the employees are located outside India, or if 50% of the or more of the employee cost is outside India. 4 criteria for determining if the active business of the company is outside India. I can reverse it and explain. When will I say the place of effective management is in India? If 50% or more of the income comes from India, if 50% or more of the asset is located in India, if 50% or more of the employees are in India, sometimes 75 employees are in outside India. Only 4 employees are in India, and they are CEO, CFO, COO, and CTO. So the payroll cost is also a determining factor. Huh? Raja? Yeah, I'll come to that. I'll come to that. Any one condition satisfying. So in law, we call it as mutually exclusive. Mutually exclusive. Even if one of the condition is satisfied, active business is in India. Or in this way, if you want to, even if one of the condition not satisfied, active business, all the conditions satisfied, ABOI is fulfilled. What is passive income? What is passive income? We all know income consists of 2 things: business income, other income. Okay? We all know income is divided into, for any entity, any organization, business, main core income, non-core income, where both the transacting parties are AE. Remember, if it is passive income, both the transacting parties should be associated enterprise, and it will also include all other incomes. It will also include all other incomes. Passive income. Both the transacting parties are associated enterprises, plus any other income will be taken. In terms of assets, employees, and payroll cost, take the average of opening and closing. If this is the first year, take the closing balance alone. Am I clear to you? Okay. How do you say in terms of board meeting? Remember, there are two conditions. One, by the conduct of board meeting, by the conduct of operation. I spoke about operation. In terms of board meeting, when will you say active business is outside India? If majority of the board of directors meeting are held outside India, if majority of the board of directors meeting are held outside India, then active business is outside India. Repeating, if majority of the board of directors meeting are held outside India, then it means active business is outside India. In India, every year. Suppose board is not the decision maker. Suppose board is not the decision maker, the decision maker is given to an individual, CEO, CFO. Where is that person located? If board is not the decision-making authority, board meetings are conducted only as a routine because of meeting statutory requirements, but all the powers and authorities of the board are given to a particular person. Where is that person located? That will determine the residential status of a company. If majority of the board meetings are held outside India, active business outside India. If board is not exercising its power or management, and such powers are exercised either by the holding company or by any other person who are resident in India, then poem will be India. Suppose if board is not the decision maker, then the place of location of CEO, CFO, CTO, whatever you call them. If there is no fixed head office, then key managerial personnel where they are located. If key managerial persons are located in every country, then who is the one who is initiating all the meetings? What is not poem concept? What will not be considered for poem? What will not be considered just for conduct of shareholders meeting is not a conclusive evidence. It's not the place of shareholders meeting. It's not about day-to-day decision making. It is strategic decisions which merely because a company is having a PE in India, it does not have, a PE means permanent establishment in India. It does not mean poem is in India. Poem guidelines are applicable if the gross turnover or receipt exceeds 50 crores during the financial year. Otherwise, small companies I am not taking, only larger entities I am taking. Please read through poem guidelines once. Once more, a quick review of poem guidelines. There are two aspects to check. One, where is the management decisions taken, board of directors or management personnel, then on operation. The law has not defined when is active business in India or poem in India. The law has defined when it is outside India. If majority of the board of directors meeting is held outside India, then poem is outside India. If the key managerial, if board is not the decision maker and KMP are outside India, key managerial personnel, then it is outside India. In terms of operations, the law says 50% or more of the passive income. What is passive income? Income from both the transacting party being associated enterprise and any other income outside India. Assets outside India, 50% or more. 50% or more of the employee or payroll cost outside India. In all these cases, ABOI, active business, is outside India. If any of the cases fail, active becomes in India and it becomes an Indian resident company. I will check this. Resident company. Okay. Even one. Why all? One. Okay. I will test this condition if the turnover is more than 50 crores in the preceding year, in the previous year. Suppose one of the conditions gets fulfilled this year. One of the conditions get fulfilled this year. Till last year, nothing was fulfilled. One of the conditions fulfilled this year, you become in this year, a resident company. The transition provisions are available in 115JH. That is the only 115 section which is not a charging section. We call it as transition provision. You were not a resident entity till last year. Due to fulfillment of poem criteria, you become a resident entity from the current year. Are you clear? Transition provision. This section is applicable if the foreign company becomes a resident company due to poem guidelines. What will be the WDV of the assets? ஏன்னா இந்தியால இனிமே depreciation claim பண்ணணும். Where depreciation need to be charged on assets according to the country in which they are incorporated and so far they are resident. WDV as per tax record of that country. I don't mind what is their depreciation rate and all. I will take the WDV of tax records of that country. But that country does not have tax rate or depreciation is not mandatory in that country. WDV had depreciation been charged from the date of purchase. We have seen this. Take the original date of purchase. From there, start charging depreciation. If books or records are not mandatory in that foreign country, take the book value of the asset. Okay. Then comes the principle of brought forward loss and unabsorbed depreciation. Brought forward, yeah. Book value means purchase value. Books are not recorded அப்படின்றது tax records. They might have maintaining as per the accounting records, but not for tax records. How will brought forward business loss and unabsorbed depreciation be treated? Whatever is prevailing in the tax records of the country of incorporation can be brought forward and adjusted over remaining period. Totally 8 years over remaining period. Where records are, that is track records are maintained, not maintained, then loss as per books. If the accounting year is not matching, less than 15 months, take as it is, more than 15 months, that is, in the financial year 21-22, the foreign company becomes an Indian company due to poem. The foreign company is following calendar year. According to this section, this needs to be converted into financial year. For the first year, take 15 months. For the first year, take 15 months. Jan 20 to March 21. If the financial year for them, if the year is July to June, then take only July to March. Okay. If the financial year of 21-22, the foreign becomes an Indian, the foreign company accounting is July to June, then take only July to March. We call it as less than 6 months, more than 6 months. Less than 6 months, take for 15 months or maximum 18 months. More than 6 months, take for a lesser period, 9 months, 8 months, 7 months, whatever it is. Am I clear to you? Okay. Am I clear to you? Okay. December to November னு ஒரு கம்பெனி இருக்குன்னா, take December to March. It can be up to 16 months. 18 months வரைக்கும் okay. அதுக்கு மேல இருந்ததுன்னா split it up into two. Only for the balance period you take it. Am I clear to you? Okay. Read through once transition portion. I have not seen a question so far. Am I clear to you? Okay. We'll understand some practical aspects of residential status. Okay. Right. We'll understand some practical aspects of residential status. Chris Gale, a West Indian cricket player, visits for 1 or 2 days in every financial year. This has been his practice for the past 10 financial year. Find out his residential status for the assessment year 22-23. Find out his residential status for assessment year 22-23. Number of days visited during 21, 22. How many days? 102 days. So first basic condition is not satisfying. We will check the second basic condition. Number of days in the past 4 years. He satisfies second basic condition and also additional conditions. Correct? Every year he is coming. Every year he is coming. So at least for 2 years he would have been a resident in India and he satisfies the second basic condition. Additional conditions. First additional condition. At least 2 years he should be a resident. Satisfied. Correct? At least 2 years he should be a resident. But I am satisfied. For past 7 years. 102 into 7. I should have checked this. 714 days. He satisfies second basic condition but does not satisfy second additional condition. Hence, he is a RNOR. ROR means he should satisfy basic condition as well as both the additional conditions. If he does not satisfy any one or both the additional condition, he becomes a non-resident. 1 minute, this is flickering. I'll just look into and come. Are you clear? Are you clear, Rajam? Are you clear? Okay. Now, part B of the question. Would your answer change if the above facts relate to Srinath, an Indian citizen who resides in West Indies and represents the West Indies cricket team? In case of an Indian citizen or person of Indian origin visiting India, what is the exception? The second basic condition is not applicable. Only the first needs to be tested. In the given case, the first basic condition is not satisfied. Hence, he is a ROR resident but not ordinary resident. Leaving employment அது coming to India தானே அது. Which one? Individuals who are leaving India, that's only for residents. What would be your answer if Srinath had visited 120 days instead of 1 or 2 days every year? Huh? Amendment. Okay. NR. Sorry. Yeah. Sorry. NR. Part C, where the Indian citizen visits for 120 days every year, then the amended law of Finance Act 2020 specifies that he will be treated as a resident if the Indian income exceeds rupees 15 lakhs. Am I clear to you? Am I clear to you? Yeah. Shall I? Yeah. Huh? No. Deemed resident is he is an Indian citizen. Due to his domicile, he is not taxable outside India. Here he is taxable in West Indies. Question number 2. The business of a HUF is transacted from Paris and all the policy decisions are taken from there. Mr. Aryan, the Karta of the HUF who is born in Bombay, visits during previous year 21-22 after 13 years. He comes to India on 15/5/21 and leaves on 15/1/22. Determine the residential status of both Mr. Aryan and the HUF. He comes to India on 15th of May. So 16 days in May, June, July, August, September, October, November, December, and leaves on 15th January 22. Repeating, 16 days in May, 17 days in May, right? 15th vara. So 31 minus 14 then. June, July, August, September, October, November, December, Jan. Aryan satisfies the first basic condition, hence he is a resident. Since he does not satisfy any of the additional conditions, because past 13 years he was only outside India, he is a resident but not ordinary resident.
All policy decisions are taken there. What is then
Control and management might be partly in India. அது இல்லாம இருக்காது கவலைப்படாத. But I'm just saying for you.
because Karta is
Yeah,
resident,
Katta is a resident, so the decisions might be taken in India.
that will be RNO or
Or in Katta is so they're not satisfying the additional condition. RNOR. Paulomi is an Indian citizen, chartered accountant, presently working in a firm in India. She received an offer for the post of chief financial officer from a company at Singapore. As per the offer letter, she should join the company at any time between 1st September and 31st October. She approaches you for your advice on the following issue to mitigate tax liability in India. A. Date by which she should leave India to join the company. B. Direct credit or of part of her salary to her bank account in Kolkata, maintained jointly with her mother to meet requirement of her family. Okay? In case of an individual leaving India for employment, the second basic condition is not applicable. It's not applicable. So, if the assessee leaves India without being here for 182 days, then she will be regarded as non-resident. Stay period up to August.
don't need to produce.
Yeah, that is true. Up to the date of leaving. April, May, June, July, August. 153 days. Balanced number of days she can be in India to get status of NR. 182 minus 181, sorry, 28 days. Hence, she should leave on or before 28th September to obtain the status of non-resident. If income is received in India, then it becomes taxable. So a direct credit to an Indian account will become taxable. However, if income is earned outside India first, then transferred to India, it is not taxable. Repatriation is not taxable. Am I clear to you? Am I clear to you, friends? Okay. Mr. Swadesh is an Indian citizen currently in employment outside India, visited India during the past few years as follows: 21-22, 58 days; 2021, 19-20, 18-19, 17-18, 16-17, 15-16, 14-15, 13-14. The total income accruing or arising from India is 3 lakhs, and from outside India from a business which is managed from India 3 lakhs, and total income received outside India is 7 lakhs. Swadesh want to understand residential status under various circumstances. For the financial year 22-23, Swadesh is planning to come to India on 1st May and wishes to stay up to 31st August. Advise suitably. Dharalma. Question number 4. Huh? Period of stay in India for 21-22, 58 days. Neither satisfies basic condition A or B. Hence, he is a non-resident. For a non-resident, for a non-resident, income taxable in India are received in India, accruing or arising from India. Sixty years satisfy ஆகலையே அதுக்கு செக் பண்ணோம். So here 11 lakhs accruing or arising from India, 11 lakhs. From a business outside India managed from India, not taxable, and total income earned outside India, not taxable. Therefore, taxable income from India is only 11 lakhs. he satisfies the second basic condition if his Indian income is more than rupees 15 lakhs. Provisions of RNOR will become applicable.
So இதுக்கு நம்ம சொல்லி
இல்லப்பா அட்வைஸ் பண்ண சொல்றாங்க. The ideal advice will be to leave on or before 26th of July to avoid to avoid fulfilling second basic condition. Are you clear?
So the trying to say is you might earn more than 15 lakhs, so get out of the country.
No, pay tax in the country.
Avoid fulfilling my condition.
Yeah, that is your advice. What income tax law tells
ನಮ್ಮ
us.
advice is sir.
Question number 5. Mr. Soham, an Indian citizen, left India on 24 2019 for the first time to set up a software firm in Singapore. On 10, yeah, yeah. Uh, for an Indian citizen, person of Indian origin, the second basic condition will not be applicable if it is 60, only 120 it will become applicable. If he becomes a resident due to this 120 days condition, not due to normally second basic condition is not applicable for him. Here it is applicable because of this 123 days and this 15 lakh. Provisions of RNOR will only apply. It will not be ROR, which means global income is not taxable. Still, income earned outside India is exempt. Only income earned in India, income earned from business or profession carried on outside India, managed from India is only taxed. You are not becoming a resident. Provisions of RNOR will become applicable. Even if you become a resident, though I call you as a resident, I am not going to tax your global income. I am only going to tax which are the other three incomes. Yes, correct. Pakka. Perfect understanding. That another 3 lakhs becomes taxable. She says the only difference you will have is on the question of this 11 lakhs, anyhow India in India it is taxable. This 7 lakhs is not at all taxable in India. This 3 lakhs is the question. Okay. and this 3 lakhs will become taxable. Here it is not exceeding 14 lakhs na varudhu. Suppose in the next year it goes beyond 15 lakhs, then there is a problem for this 3 lakhs. Mr. Soham, an Indian citizen, left India on 24 2019 for the first time to set up a software company in Singapore. On 10/4/21, he entered into an agreement with an Indian company for the transfer of technical documents and design to set up an automobile factory in Faridabad. He reached India along with his team to render the requisite services on 15th May and was able to complete on or before 20th August. He left for Singapore on 21st August. He charged 50 lakhs for the services from LK Limited, determine his residential status, and examine whether the fees charged from LK Limited would be chargeable to income as per income tax law. Yes, that is obvious. Even if he is a non-resident, income accrues or arises from India, it is taxable in India. First, the RS. 15/5 to 21/8. So 17 days in May, 17 days in May, 30 days in June, 31 days in July, and in August, 21. So totally 65 days. 99 days. Okay. He is not satisfying the first basic condition, and the second basic condition is not applicable. Hence, he is a non-resident. 120 டேஸ்க்கு மேல இருந்தா தான் அது யோசிக்கவே முடியும். இல்லாட்டி you can be sure of he is a non-resident. Am I clear to you? He is a non-resident. Fees for technical services received from an Indian company is taxable in India as the income is accruing or arising from India.
Sir, and that, sir, the July 26th was previous sum. Is it June 26th?
123
Ah,
4 days கம்மியாக்கணும்.
அப்பனா ஆகஸ்ட் 26th. You just stay till 31st August.
Sorry friends, yeah, you are right. It does not satisfy basic condition, correct? A person of Indian origin visiting India. First எடுத்தோனே சொல்லிடுறாங்க he is a citizen of India. Okay, right? Question number 6. Infosys Incorporation is a sourcing entity for Infosys India. Infosys Incorporation is incorporated in Germany as a 100% subsidiary of Infosys India. அதனால poem is in India.
No.
Just because it is 100% subsidiary, it's not. The warehouses and stock in them are the only assets and they are located in Germany. All the employees of the company are also in Germany. The income breakup as regards his total income for the past 3 years. 30% of the income is from transactions which were purchased from parties who are non-associated and sold to associated. So it's not a passive income. It's not a passive income. Passive income means both the parties should be associated. Yeah, purchasing sales. Yeah. 30% of the income is from transactions where purchases are made from parties who are associated and sold to associated. Yeah, they are associated, right?
Second, not
Okay. C. 30% of the income is from transactions which are associated and sold to non-associated taken. 10% is other income. Okay. Nada Raja? Any one condition satisfying. Okay. In terms of operation, a company is said to have active business outside India if 50% or more of the passive income is outside India, 50% or more of the assets are located outside India, 50% or more of the employees are outside India, 50% or more of the payroll cost is outside India. Passive income means both the parties should be associated enterprise. In the given case, passive income is only 40%. Assets, employees, payroll cost are all totally outside India. Hmm. Yeah, yeah. You said transfer pricing applicable. We don't know. How do you determine where board of directors in India na solirken, where board meetings are held in solirken? Interest, all other incomes are passive. Hence, ABOI is outside India and the company is a non-resident company. எனக்கு வேணாம். எனக்கு வேணாம். Is this clear? Any doubt? Subpart A. 30%. Subpart 2. Other factors remaining constant in the above example. If Infosys Germany has 50 employees, 47 of them in Germany, 3 of the KMP are in India. Out of the total payroll cost of 5 crores, 3 crores is for these 3 employees. Okay. More than 50% of the payroll cost in India, conditions are mutually exclusive, which means even if one condition is satisfied, then active business is in India, poem is in India.
employees, since the company becomes effectively managed in India, would that taxation be
Services are rendered outside India, don't worry. Employees will not be taxable. Shall we? Other factors remaining constant in the example. If totally 5 board of directors meetings are conducted, 3 in India and 2 in Germany. Active business is in India due to conduct of board meeting. Okay, not in terms of operation. I'm still in part A due to board meetings, where majority of the board of directors meetings are held in India. Then active business is in India and poem guidelines are fulfilled. In the given case, 3 out of 5 meetings are in India, hence the entity's poem is in part B. The agreement between the companies specify that Infosys Incorporation can sign any contract of a value of less than 10 lakhs suo moto. For other contracts more than 10 lakhs, permission is needed for Infosys India. Okay, place of effective management, India. Operational decisions will not be a concern, but strategic decisions are made in India. Strategic decisions are made in India. Are you clear? Are you clear? Question number 7. An Indian multinational group has a holding company A in country X. A company has 100% downstream subsidiaries B and C in country X and D in country Y. A company has income by way of dividend and interest from investment made in its subsidiary. The place of effective management of A company is in India and is excised by the ultimate parent company of the group. Subsidiaries B, C, and D are engaged in active business outside India. The meeting of the board of directors of the subsidiary are also held in respective country. Comment on poem applicability for all companies. An Indian multinational group. So A Limited is an Indian company. Okay, and an Indian multinational group has a local holding company A Limited in country X.
There is some effective management of A company.
Place of effective management of A. A has 3 subsidiary company, B, C in one country, D in another country. A has only income by way of dividend and interest from investment made from its subsidiary. So everything is a passive income. The poem of A is in India, and is excised by the ultimate MNC. The subsidiary B, C, D are engaged in ABOI, which means passive income not there, employee is not there, other condition. The meeting of the board of directors of subsidiary is also held outside India. Comment on poem applicability. A is the only company which fulfills the poem guidelines. B, C, D does not fulfill the poem guidelines. Yeah, yeah, yes. Since they have given, I know அப்படின்றத communicate பண்றோம் examiner. Is poem applicable because of poem? Does B, C, and D become Indian entity? Uh, Not based upon residential status, not based upon company of incorporation, only on the basis of poem guidelines. By the basis of incorporation, B and C are country X, D is country Y's residents. In what way are you checking whether they are Indian residents or not? That's why the question is check on poem guidelines. Yeah, they gave a notification of exemption. No, 1920 there was a notification of exemption. Oh, sorry, 2021 there was a notification of exemption. இப்ப கிடையாது. Question number 8. A foreign company appoints liaison office in India for spreading the name of a name and products of the company. The liaison office makes day-to-day decision and operational function. Is poem applicable? Why? Yeah. Should be question number 9. John Butler Textile Incorporation is a company incorporated in Colombo, Sri Lanka. 60% of the shares are held by a Indian company. John Butler Textile Incorporation has its presence in India. The data is fixed assets are depreciated value in India, in Sri Lanka. Intangible assets, other assets, income from operations, income from investment, number of employees. For poem purpose, state whether the company shall be said to be engaged in ABOI. Because of the increased operation in India, more manpower is needed. 30 more employees may be required in this regard. The company can either take this employee directly in its role or can source the increased operation to an external agency which will engage 15 employees in its role and finish the work for the company. Which choice will be better? 90, 70, 40, 180, 30, 90. 90 plus 70 plus 40, 180. Raja? இப்போதானே எழுதினோம் ஹோல்டிங்லாம் ஒரு கண்டிஷனே இல்லையே.
Point the
90, 40, 30. Registration. கொஞ்ச நேரத்தில் படிப்பேன். Sorry. Total income 57 plus 30 plus 30. Is this correct? Okay, that 13 should also be taken. That 13 should also be taken. Okay. I should take the full income. Huh?
no, he's doing the other side. 50% DOI, AB, not ABOI தானே நீங்க பண்றீங்க சார்.
Hmm.
DOI
If you want to check for ABOI, you will take this 42 alone.
where both transacting parties are associated, and it will also include interest.
Your condition is to take check passive income out of total income. Yeah, 100. 42. Why? So you are, that's what you assume, that this 15 is not through both being associated. Yeah. Then you are right. Okay. Then you are right. ஏன்னா ஏன்னா எனக்கு ஒன்று என்ன தெரியும், எக்ஸாமினேஷன்ல இது வந்து இந்த கண்டிஷனும் நாட் ஃபுல்ஃபில்டுன்னு வந்தது. ஓகே. ஸோ ஐ திங்க் அதுதான் அந்த கொஸ்டின் இருக்கான்னு பார்த்தேன். Examinationல I think they took your assumption that they are not, since it is not specified, they are not associated. Okay. பட் 100% எடுத்துக்கணும். அது பார்த்தேன் இன்னொரு கொஸ்டின்ல அவங்க போட்டிருக்காங்க. பட் இல்ல நான் நம்பர்ஸ் ஏதாவது தப்பா காப்பி பண்ணியிருக்கேன் நானும் எனக்கு தெரியல காப்பி பண்ணும்போது. பட் ஐம் வெரி ஷூர் தட் இட் கேம் அஸ் நாட் அசோசியேட்டட். ஓகே.
Split மட்டும் சொல்லுங்க. 15, 42, 30, 30. You tell what is what.
This 15, if it is from both associated, part of passive income. These two are passive income, no doubt. Yeah, it can be interest or a dividend.
So 30 and 40
No, then
are passive, 100%.
100% passive.
And 42 is passive.
Because for the third answer, I require you your attention. That's why, okay, Indian income, income earned in India, and passive. Okay, it is not income earned where both parties are AE and any other income. In this case, we assume that the parties are not AE, only other income is considered. Okay, only other income is considered. So 15 plus 42, okay, 57. 15 plus, sorry, 15 plus 30, yeah, 30 plus 30. Since less than, or since 50% or more of the income is outside India, in this condition, active business is outside India. Now I understand that 13 is taxable in India. அதில் எனக்கு ஒன்றும் கொஸ்டின் இல்லை. Income arising are occurring, but is it a passive income now? Unless the words AE is given. Okay, now I am able to recollect that. Okay, that 13 is taxable in India. அதில் வந்து there is no doubt about it.
How would you
AE, both parties should be AE. That word should be there. Wait for the next question, you will get more clarity on that. That's what both parties is not you and me. The two ultimate parties you are serving to. Okay, where purchases are made by from associated enterprises and sales is made to associated. Where I am selling to associated enterprises, I am buying from associated enterprises in there. Where purchases are also from associated enterprises, sales, services received, services provided, like that. Yeah. on the basis of employees. Employees தானே அடுத்தது? Yeah. Total employees 40 plus 60, 100. Employees in India since 50% or more of the employees are outside India, active business outside India in this condition also. Poem is not in India, it's a foreign company. Since in all the three conditions, active businesses outside India, it is a foreign company. Now I'm going to part B of the question. Please listen. Okay, please listen before taking it out. Contractual employees are also considered for determining OM guidelines. We all know contractual employees are our employees. Okay, okay. The term is directly or indirectly. So even indirectly employed also. Okay. Option 1, option 2. Existing employees 100, 100. New employees in option 1 will be 30, option 1 2 will be 15. 15 தானே? எதான் தானே டெம்பரரின்னு எங்க சொல்லிருக்கு? அவுட் சோர்ஸ் தான் பண்றேன். Contractual employees. Everybody will go home. Is this correct? Is this correct? Total Indian employees existing is 40 plus another 30. Here existing is 40 plus another 15. Percentage of Indian employees, okay, 70 by 130 into 100, 54, whereas here it is 48. Okay, hence it is advisable to have contractual employees as ABOI will be fulfilled and the company can continue to be a non-resident. Are we clear? Okay, do the next question. So 5 countries na total பண்ணி இந்தியாவோடது எவ்வளவு இருந்தாங்க? Okay. I'm going to the final part of the answer. I'm going only to the final part of the answer. Okay. And not to the working you would have done. Okay. Actually, it should have been question number 10, but question number 11. Okay. It should have been 10, but I think I have marked it as 11. Okay. Right. I'm going only to the final. In terms of operation, all 4 conditions are satisfied. I think so. So, poem is in India. Correct? Oh, all 4 conditions are. Oh, okay. Okay. It's outside there. Even எவ்வளவு percent வந்து passive income எவ்வளவு percent? That okay. Outside India எவ்வளவு வருது? 55. Okay, 45. எடுத்துக்கிறேன். Assets? 40 is in India. Okay. Employees? 41 in India by employees. 41 சொல்றாங்க, கொஞ்சம் செக் பண்ணுங்க. இல்ல அவங்க 46 சொன்னாங்க. And payroll? Okay. All 4 conditions indicate active business is outside India. Okay. Amongst these 2 things, which is superior? Suppose in this question, amongst these 2 things, which is superior decision making? Even if one of the condition is fulfilled, but the decision making is wholly outside India or majority is outside India, still it will not be satisfying poem guidelines. One thing you have to remember, poem guidelines ஏதோ tax பண்றதுக்கு இல்ல. எப்படி இருந்தாலும் Indian income is taxable in India, even if you are a foreign company. Poem guidelines is don't locate yourself in don't form letterpad companies and try to avoid taxes. Okay. Decision making only will be superior. Okay. I haven't seen a question like that, but one of the circulars says decision making is superior. Okay. The last 2 questions you worked out just now, that Sweden, Switzerland, and Sri Lanka have repeated in exams. Okay. Trans Global India Incorporation, a company incorporated as per the laws of Ireland, became a resident company during the previous year due to fulfillment of POEM guidelines. On evaluation of the books of the company, you understand the following asset position. Building purchased in 2018, computers in 19, and other assets in 20. The book value of the assets as on 1st April 21 are 40 lakhs, 14 lakhs, and 5 lakhs respectively. The depreciation rates are 10%, 20%, and 30% under the tax law of that country. However, depreciation is not mandatory charge in such countries. This apart, the company has a loss of 21 lakhs which is carried for the past 3 years in the books. From the facts provided, determine the opening WDV of the foreign company. What will be the opening WDV if the company is not assessed to tax in Ireland? How will you deal with brought forward loss? Is the company eligible to claim foreign tax credit, if any, in the financial year 21-22? First one, Cancer. Yeah. Since the company, since the country in which the company is incorporated does not have mandatory depreciation guidelines, we need to arrive at the book value as on 1/4/21. We need to arrive at the book value as on 1/4 by applying Indian rate of depreciation. Particulars, building, computers, others went down because others are just no, the other assets. எதுக்கு building purchased on 1/4/18, 45 lakhs. Less depreciation at 10% for building. Yeah, mandatory depreciation இல்லாம நிறைய country இருக்கு. Mm. Yeah. In India, yes, it's not optional that you can claim. We don't know. Is it furniture, patent, what type of asset? Huh? Of the other country.
But it's not compulsory. Not compulsory.
Even this provision is not at all practically possible. The transition provision நீ வந்து அங்க இருக்கிற book value எடுக்கிறது தான் safe. Always, if you look at, you cannot go back and correct everything in that record. That is infringing on the other countries. Actually, if the simplest provision of 115 JH should have been take the book values irrespective of whether depreciation is there or not.
Opening value.
அவ்வளவுதான். Just see why they will not depreciate in the other country. They will obviously depreciate because they want to pay lesser tax. Wherever people want to pay lesser tax, they will claim depreciation as a charge. Suppose if that other country has exemption, then they might not have charged the depreciation. That is the only case where we lose.
This case, right, where the other country is not compulsory.
Hmm.
People may do or may not.
Yeah, that's what. But majority of the time they will do because why will they pay tax? Yeah. So even if you say depreciation is optional, people will claim depreciation because they want to pay lesser tax. On the day of 1421, we will convert it into Indian currency. It's very, what I would say is, the provision is too young, so they have not incorporated a lot of things into it, and its rarity. Shall we? Shall we? So the first part of residential status is over. In this, look for poem question. Individual, if at all there can be an MCQ, they might. Otherwise, not as. I'll come because that is there in DTAA. I'll come to DTAA. What is foreign tax credit? So, next is what income is taxable in India? Scope of total income. We all know if income is received in India, it is taxable. Deemed to be received in India, it is taxable. What is deemed to be received in India? It is that PF balance, pension balance, URPF converted to RPF. Those are all deemed to be received in India. Income accruing or arising from India. Source of income is India. And deemed to accrue or arise from India. These two are the concepts which we need to understand. Receipt test is easy, okay? Irrespective of place of accrual, if income is received in India, it is taxable. Excess contribution by PF to PF, excess interest credited, conversion of URPF, national pension, these things you know, okay? Leave around received and deemed to be received. Obviously, these are in India only. Where you have to focus is accrued or deemed to accrue in India. Let us go headwise. Salaries, where is it accruing? Wherever the services are rendered. Okay, look at this. But there is an exception. If services are rendered in India, then such salary income is taxable in India. Now, one exception. All of us, please understand. Indian embassy outside India. Somebody is working, an Indian citizen is working. Even though he is rendering services outside India, it is taxable in India. Nada Raja? Purila. The place of the embassy is deemed to be the country in, yeah, exactly. Yeah. So, salary paid or payable by government to Indian citizen working in embassy or high commissioner office outside India. However, allowances and purposes are exempt. Salary taxable. To whom? To whom? Indian citizens. The Indian citizens. If I appoint a foreign national in my embassy, it is still taxable in that country only, not in our country, because services are rendered outside India. Only if Indian citizens are employed in that embassy, it will be taxable. Okay? Reverse la polam po. Suppose if a foreign national is working in a foreign embassy in India.
Arising in India, it will be taxable in this country.
So Indian government has to give exemption. Indian government has to give exemption. Remember, US embassy there is an American working. Indian government has to give exemption. There I have kept a check. I will give you exemption, provided you give me exemption for my country employees in outside India. Okay, right? Okay. Remuneration received by officials or embassies of a foreign state. 10.6. Remuneration received by an individual who is not a citizen of India. If he is employed in India, he is an Indian, taxable. For services of office nature in High Commissioner India is not exempt, provided remuneration received by our corresponding official in such foreign state should be exempt. And the above mentioned official should not do any business or profession in India. Are you clear? Okay. So, salary and tax பண்ணுவேன் because salaries are received in. You are supposed to be only an embassy staff. You cannot do anything else. Okay. Huh? Yeah, I think employment agreement itself prohibits. House property. Wherever the person is, if the property is located in India, it is taxable in India. Wherever the person is deemed to accrue or arise in India. The third important, most important is business or profession. If there is a business connection, then such a portion of income arising due to such business connection is taxable in India. Repeating, if there is a business connection, such portion of income which arises due to such business connection is taxable in India. Now let's understand. What is adala direct? What is business connection? Business activity performed by a non-resident either directly or through his agent. Okay. Habitually concludes contract on behalf of non-resident. Shall I repeat? On behalf of the non-resident, if I conclude contracts here, that means that non-resident has a business connection in India. Whatever arises from that business connection is taxable for the non-resident. Okay. What is the first word? Abdina? Regularly. Isolated kadadu. Okay. Habit is a, I told you international taxation is full of English term. Habit is a continuous activity, not a one-time activity, recurring activity. Habitually concludes contract and the contract level income, because here I have said such a portion of income is taxable for the non-resident. Okay, am I clear? Habitually plays the role of the principal, leading to conclusion of contracts for non-resident, and such contracts are in the name of the non-resident or for the transfer of ownership or for grant of using any right or provision of any services. Lease agreement enter பண்ணலாம், assets are purchased, anything I am doing habitually for that non-resident. Come on, what is business connection? Right. If business connection is there, income accrues or arises in India, I accept with you. What is business connection? That's what I am explaining. Holds a stock or stores and delivers them on behalf of such non-resident. Another, hold stock or stores the stock and delivers on behalf of non-resident. Okay. Das Auto. Volkswagenோட Cars, they keep it on display, store it, and sell it, delivers it. Am I a agent of that non-resident? Yes. Yeah, principal to principal இருக்கலாம், principal to agent இருக்கலாம். But generally, I'm the agent of the non-resident. I am just putting on display Rolls Royce. A customer comes to me, I explain the nature of the car, but the customer can only book the order directly to Rolls Royce.
No.
He is just an exhibitor. There is no business connection. Business connection or a second delivers on behalf of non-resident is important. Okay. Yeah, but I am not a agent of the non-resident. I am just a holder, exhibitor.
You are not an agent.
Directly, Volkswagen is taxable in India for the car purchased by resident as a C. Yes. Is it through business connection? No. Some other place. Habitually secures orders in India. Yes. Liaison office தான் இங்க இருக்கும். Not operational office. Habitually secures order. Okay. To whom? To a non-resident or to any person on instruction of non-resident. How? A secures order to Mr. X, a non-resident. Business connection established. A secures orders for Mr. Y, who is controlled by Mr. X or who controls Mr. X. Business connection established. A secures orders for both X and Y, both of whom is controlled by Z. Business connection established with all three parties. Whatever you call it. Yeah. Either directly or indirectly to the non-resident or any person on the instructions of the non-resident. Okay. These are considered as business connection. Debts had a problem. What is the biggest problem? அமேசானுக்கு இந்தியால பிசினஸ் கனெக்ஷன் எப்படி எஸ்டாப்ளிஷ் பண்ணுவீங்க? எப்படிப்பா? Amazon enters into a contract with someone and they delivers. Amazon doesn't deliver technically. Amazon enters into a contract, they delivers. How will you establish? Okay, Amazon விட்டுறலாம்ப்பா. அது கொஞ்சமா உங்களுக்கு டிஃபிகல்ட்டா இருக்கும். Okay, WhatsApp, Facebook, Meta. How do you explain business connection? Worldwide problem is this, not ours. Where the server is located அப்படின்னு முதல்ல கொண்டாங்க. We cannot apportion. Insta, Facebook ஓட சர்வர் எங்க இருக்கு? Cloud and under the sea. சோஷியல் நெட்வொர்க்கிங்னு ஒரு படம் பாருங்களேன்.
ஆ.
Under the sea, cloud, how will you own? It becomes a very big problem. European Union and US started crying huge. Users are there, but income is not accruing there. So came a concept, significant economic presence, that is going to be the question for May 22. So came the concept of significant economic presence. இத வந்து இந்த மாதிரி கூட்ஸ் மாதிரி கொண்டு முடியாது. We need to have some other way. Business connection also includes significant economic presence. What is that? Transaction in respect of goods, services, or property carried on with a non-resident, with any person in India, including provision of download of data or software in India, provided that transaction value exceeds 2 crores. For goods, software services. நீங்க பாட்டு சாஃப்ட்வேர் டவுன்லோட் பண்ணிட்டே இருக்கீங்க நெட்ல இருந்து. Chrome is at least free. There are some softwares. For example, we are doing something known as ice cream recorder. Okay. Rio player. We are paying. And we don't know to whom we pay. Google AdWords. Now all of them, because of these provisions, got an Indian entity. இதெல்லாம் இன்ட்ரடியூஸ் ஆகும்போது யாருக்குன்னு தெரியாது. ஸ்வைப் யுவர் கிரெடிட் கார்டு, டிடிஎஸ் பிடிக்க முடியுமா? Okay. Even now, 999 rupees Amazon Prime, 799 rupees Netflix, or there is a rate slash that went on. 499 rupees Sun Next. யாருக்கு pay? Sun Next, okay. The other two, to whom are you paying? If it is paid by a business entity, what is the TDS? This became a problem. Is that cost for the person from India exceeds 2 crores? Then that person has significant economic presence in India. Next, systematic and continuous soliciting of business activity. Systematic and WhatsApp, Insta, Facebook, or engaging in interaction with active users through digital medium, provided the number of users exceed 3 lakhs. சென்னைனே கொடுத்திருக்கலாம். நுங்கம்பாக்கம் இருக்கிறது. That means active business is significant economic presence is in India. 3 lakhs. என்ன சார் 3 lakhs? சார் நீங்க யூரோப் பார்க்கணும் சார்.
Population.
Every station is a country there. Yeah, smaller apps also. She's right. Okay, the non-popular apps. Okay, so significant economic presence has been first time defined in the law this year, Finance Act 21. Okay, and then I'll come again. Further, the above transactions or activities shall constitute significant economic presence in India, whether or not the agreement or transaction or activities is entered in India. You might even be a US server, you might even be a US cloud. The non-resident, whether they have a place in India, business of India, the non-resident, whether they directly render services in India. I don't worry. If you have 3 lakhs or 2 crores, you will be having a significant. However, where a business connection is established by reason of significant economic presence in India, only so much of the income that is attributable to the transactions or activities shall be taxable in India, which we have seen already. In the beginning itself, they have said what is business connection. Okay, very, very, very difficult to monitor provision, but slowly they are entering.
Example, this was say non-resident. Agreement between
அதை க்ளோஸ் பண்ணாதே, அதை க்ளோஸ் பண்ணா எங்களுக்கு நெட்டு போயிடும். நிஜமாவே அஜித்தோட ஆட்டோ மாதிரி தான் நாங்க எல்லாம் உட்காந்துருக்கோம். எங்களோட எக்ஸ்பீரியன்ஸ் 40 கிளாஸா நாங்க எக்ஸ்பீரியன்ஸ் பண்ணிட்டு இருக்கோம். ரெண்டு இருக்கும். Really, you can say no problem. Oh, sorry. So what is signal? அப்படியே அது ஓபன் க்ளோஸ் பண்ணிட்டு போயிட்டார். அதுக்கு அவர் இங்கே இருந்திருக்கலாம்.
agreement between like a production house in India with Netflix. That's like the point number one.
The agreement, okay. The agreement, but அதுக்கு தனியா வரேன். But still, this is business connection in your first. No, A and B, 2 crore users and sorry, இது A and B நான் நம்பர் பண்ணிருக்கேன். Okay, right. So what is business connection? Habitually secures order, habitually concludes contract, habitually plays the roles of principal, holds stock, stores it and also delivers it. This apart, even significant economic presence is a business connection. Okay, we all know what is significant economic presence. What is not business connection? Again, this networking company come into play. In case where all the operations are not carried out in India, where all the operations, that's what I said, Rolls Royce, okay, the income that is reasonably attributable to the operation carried out in India is considered as Indian income. That's what I was saying also. Now, again, all this, this is going to be all the more difficult to monitor, but I will tell you what it is. What is income attributable to operations carried out in India? Income from advertising, targeting customers residing in India or accessing advertisement through an internet protocol located in India. அது இந்தியன் ரிசைடிங் இன் இந்தியான்னு சொல்ல முடியுமான்னு தெரியல. இந்தியன் எது?
Amazon Prime. Prime India is different from Prime US.
Yeah, Netflix India is different from Netflix. Google. Very difficult. Income from advertising, targeting customers residing in India. Little easy. We were all saying, a non-resident having a property in India want to sell that property, he places the advertisement in any portal that is targeting customers residing in India. Okay. After completing his chartered accountancy, Antonio goes and settles outside India. He goes to Europe. From Europe, he places a matrimonial advertisement saying, I want Okay. You want Venkatesh sound? No, he is laughing like character. Okay. Advertisement. Advertisement targeting customers residing in India. That's okay. Or accessing that advertisement through IPA, Internet Protocol address located in India. So if I access that advertisement, IPA is in India. Okay. ஆனா யூஎஸ் போறவங்க எல்லாம் யூஎஸ்ல வரவங்க எல்லாம் ஆளுக்கு 2 ஆப்பிளோட வராங்க. இந்த நிஜமா வைப்பா என்னோட ஃப்ரெண்ட் ஒருத்தர் சொன்னான் 4 ஐபோன் வாங்கணும்னா இட் இஸ் பெட்டர் யூ டிராவல் அண்ட் கம் பேக் because the discount is so high. Okay, so you can understand that adodi IPA is going to be a bigger problem. But generally, income from sale of data collected from persons residing in India. Yeah, impossible to monitor. That's ரொம்ப பெரிய problem. Income from sale of data collected from persons residing in India. Today, every shop that you go and buy, they want your mobile number. Let bill போட மாட்டேன்றான். எது நான் ஒரு சாதாரண டிபார்ட்மெண்டல் ஸ்டோர்ஸ்ல போய் ஐ ஓகே நீ நோட் புக் வாங்குவ நான் கட்ல கொண்டு வாங்கினேன் ஓகே நீ அப்படி நான் அப்படி என்ன பண்றது அதனால தான் நீ அப்படி ஃபர்ஸ்ட் அட்டெம்ப்ட் நான் இல்லன்னுவேன் ஓகே he is asking me mobile number. I said hey எதுக்கு மொபைல் நம்பர் மெசேஜா அனுப்பிச்சிட்டு இருப்பாங்க அதுல இருந்து பட் that data is a bigger today data is the greatest asset.
School and they're sending like messages to
yeah நீ ஆண்டோனியோட்டே பேசிக்கோ okay then you have to understand maybe difficult to digest but நீங்க ஃபவுண்டேஷன்ல என்ரோல் பண்ண உடனே உங்களோட இன்ஃபர்மேஷன் இங்க வரும் yeah persons residing in India in the second custom as he said are using IPA located in India. Income from sale of goods and services using data collected from persons residing in India or using IPA located in India. Okay, so you income from sale of goods and services, not sale of data. Sale of data, previous point. Using that data, I am selling my goods, I am selling my services. இதெல்லாம் business connection. இதெல்லாம் income attributable to operations carried. Normally, in case where all operations are not carried out in India, there is no business connection. However, the income that is reasonably attributable to the operations carried out in India. இது இந்த sale of goods எல்லாம் கண்டுபிடிச்சிடலாம். இந்த world wide web, how will you find out? How will you say Netflix is having Indian income? Yeah. It is taxed. No, it becomes very difficult to track the person and tax him. That person server is at one place, resident of some other country, IP address some other country, buyer Indian. எவ்வளவு இடத்துல நான் சொல்லட்டுமா இப்போ ஃபாரின்க்கும் இந்தியாவுக்கும் நீங்க I don't know how many of you have really faced this problem. I face this problem almost very often. Okay, Microsoft Teams என்ன ப்ராப்ளம்ல நான் இருக்கேன் எதனால நான் வந்து உங்களுக்கு லிங்க் அனுப்புறேன்னா என்னுடைய மந்த்லி சப்ஸ்கிரிப்ஷன் நான் கட்டணும்னா ஐ நீட் அ கிரெடிட் கார்டு ஐ ஒன்லி ஹேவ் அ டெபிட் கார்டு They are not accept foreign debit card ஒன்னு கிடையாது போல இருக்கு. Which the one which is more sure of money is not recognized. So I had some other friends, நம்ம சதீஷோட credit card கொடுத்து வச்சிருந்தேன். அதை டிக்ளைன் பண்ணிட்டான் because my name is not matching with KYC not that day. என்கிட்ட இல்லடா கிரெடிட் கார்டு, உனக்கு கட்டுறதுக்காக நான் கிரெடிட் கார்டு வாங்கிக்க மாட்டேன். So that is the problem I am facing. I am trying to solve that problem, explaining them daily. Sir, I am paying monthly subscription. I was paying for 1.5 years now. From March 20, I am paying. Suddenly you are declining, saying that the name in the credit card and the name of the user is not mapping. At least it makes sense. At least I would have gone for another app. நம்ம 40 classes முடிஞ்ச உடனே இந்த மாதிரி ஒரு டிக்ளனேஷன் எனக்கு வந்திருக்கு. KYC not passed. உனக்கு எதுனா KYC? So this is the problem. ஆமா இல்ல நிறைய ப்ராப்ளம்ஸ் இருக்கு. அவங்க கிரெடிட் கார்டை ரெகக்னைஸ் பண்றாங்க. Okay, and I am facing this problem not only in this. I am facing in this problem if I want to buy something in US and some of my friend is coming. I want to buy. I cannot use an Indian card. And அதுலயும் மாஸ்டர் கார்டா, மாஸ்டர் கார்ட்ல இந்த கேட்டகரி ஆஃப் கார்டா? No, I'm saying justly. So it becomes a real problem. That's why these rules, okay, it is in the what I'm saying 21 la introduce பண்ணிருக்கோம். It to get matured. Law is like humans. Okay, it will have teething problems. We have to understand that. Only if we understand it, we will enjoy law. எடுத்தோனே law cannot be and you cannot shout as soon as a law. How can this person here? The whole nation wants to know. Yes, sir. The law will take some time to mature. Yeah, 40A3, when the provision was introduced, huge cry. Slowly we made it. Recently only we said the debit card, credit card are also accepted modes of payment I can track. But once it matures, it will stand strong. Some laws never mature also. Some humans never mature. Okay. Mere purchase and export of goods from India does not mean there is a business connection. Shooting of films does not mean there is a business connection. Many foreign films are shot in India. Okay. Collection of news, BBC, ABC Corporation. Okay. Agents who are not representing non-resident but have their independent status. I am a principal to principal contract. Okay, I am not an agent contract. I don't get commission. I buy from you, I make a markup and sell it. Activities confined to display of rough diamonds in special economic zone only for companies for purchase. Okay, this alone is only for companies, not for individuals. Okay, what is business connection? Business connection is includes significant economic presence, and these are all the aspects of significant economic presence. It's a questionable area from this attempt onwards. Simple questions will only come initially, so don't miss it. Am I clear to you? So once business connection is there, income accrues or arises from India. How will you say capital gains accrues or arises from India? If the asset is located in India. Okay? If the asset is located in India. If it is movable asset. Registered in India. it is registered in India. Purchase bill இருக்கும். Trackable இல்லன்றது வேற. இப்போதான் நம்ம பேசணும். It is not trackable is different. But if the asset is located or registered in India, then it is known as an okay. There was this company called Hutch, which holding was in Netherlands. Okay. They held the shares through subsidiary, okay, one holding investment company, okay, which was in Mauritius. This investment company was in Mauritius. Okay. The investment company had their balance sheet like this. The investment company's balance sheet was like this: liabilities, share capital, and reserves, loan. Assets, investment in Hutch India. If I sell these shares, is it taxable in India? Yes. If I sell this company, which shares I am selling? Shares of the investing company. Remember, if I sell the shares of, it is taxable because the company is in India. If I sell the shares of this investment company, not taxable because the company is in Mauritius, the seller is a Netherlands person, and the buyer is somewhere else in outside India. Seller, someone, a non-resident. Buyer, non-resident. Shares sold is that of a foreign company. Can Indian government tax it? So clear? Okay. But how come they are buying these shares for so much value? Because of the investment in India. Because of the investment in India. This became a problem for us. For the first time we realized, இப்போ நம்ம கண்ட்ரியில ஒரு லேண்ட் இருக்கு, which is held by, okay, foreigners cannot hold, but for example, which is held by a foreign company, they are selling off that company. That company's value is because of this land. We were unable to tax that transaction. Retrospective amendment from 1/4/1961. Supreme Courtல slash பண்ணாங்க. You cannot amend. So 30 வாட்டி மூக்க உடைச்சிட்டு இருக்கும் அது வரைக்கும். At one point of time, we have to understand that, okay, it's a learning for me. I made a mistake. I can only prospectively correct. I cannot go and tax Vodafone or Hutch now. Okay, we'll take it as a learning exercise. Okay, every learning has a cost associated. Let's understand. So now, how does capital gain work? Assets located in India for movable, registered in India, immovable. Now look at this. An asset or capital asset being shares or interest in a company or entity registered outside India shall be deemed to be located in India if the share or interest derives substantial value from assets located in India. The shares of that Mauritius company is because of the Indian. அந்த இந்தியன் கம்பெனிக்கு எப்படி வேல்யூ வந்ததுன்னா again significant economic presence அது. They were making losses only, but they had the huge data of 1 crore subscribers. அப்பவே நான் இன்ஸ்டிடியூட்ல பேசியிருக்கேன் ஒரு ஆப்பர்ச்சுனிட்டில. What is sold is not company, what is sold is not shares, what is sold is you and me, people. அந்த ஷேருக்கு வேல்யூ கிடையாது, டேட்டா. இந்த டேட்டா வச்சு how they can manage. Data is you and me. How many messages you get in a day which is irrelevant to you? Okay. The recent thing that rummy, what is happening is simply என்னைக்கு அது ஸ்கேமா வெடிக்க போகுதுன்னு தெரியல அந்த ஆன்லைன் ரம்மி. Okay, coming back. So, what is meant by substantially from assets located in India? The law says the value of the asset exceeds 10 crores and represent at least 50% of the assets owned by the company. Wherever we have used the word substantially, the 50% வந்துட்டே இருக்கும். சார் இதுக்கு முன்னாடி இங்கே யூஸ் பண்ணிக்கோமா? Yes, in trust 1023C, if it is substantially funded by the government. Okay, substantial interest where, substantial money where. Okay, so coming back, explanation 6 specifies that share or interest in a company or entity registered or incorporated in India shall be deemed to derive its value substantially from the assets located in India if on the specified date the value of the Indian asset exceeds 10 crores and represent at least 50% of all the assets owned. Yeah, on the date of sales, etc. Balance sheet. But one thing which we have to understand, my intention is to tax all the, and the company level 2% shareholder. He is selling his shares. That Mauritius company, my intention is to tax these big people. But some 2%, 3% shareholder is there. I don't want to say. However, this is not applicable for a shareholder who holds 5% or less in the company. This is also not applicable for non-resident having alternative investment funds specified by SEBI, whose main activity is investing through mutual funds, etc. I am not going to tax this 5% or less. Ana adikulu indirecta or provision irukku. If that person is a dominant person in the company, then I will tax it. Look, 5% he holds in the sonne. Sells soll. Today you are holding, you are a non-resident holding 8% in a company which has invested in India. That company has substantial value in India. You are your sales are taxable in India. First 4% is taxable. First 4% is taxable. Okay. In terms of other sources, gift received from a non-resident from a resident is now taxable. Gift provided by a resident to a non-resident outside India is taxable to such non-resident if the aggregate value of gift exceeds 50,000. Relatives not taxable. Interest paid by a resident, paid by Government of India, paid by another non-resident where the loan is used for business or profession in India. Repeating, interest to whom it is taxable if the receiver is a non-resident, payer is a resident, or payer is by a government, paid by another non-resident. Is that interest taxable in India provided the money is used in India? சொல்லுங்க. Royalty also same. Paid by a resident, paid by government, paid by another non-resident, where the benefit is used in business in India. Again, this is what is all these smaller countries trying to do. Park their royalty there, enter into a contract there, and use it in India, use it in it. So now they want to tax it. Note, where a resident avails loan or benefit from non-resident outside India and uses it for business or profession outside India, that such interest or royalty is taxable for such non-resident, because if it is paid by a resident, it is taxable. Interest on money borrowed by the non-resident for any purpose other than business or profession.
For the purpose of investing in India, then it's
Dividend. If dividend is paid by an Indian company, it is taxable irrespective of the place of receipt. CBDT has clarified, if dividend is paid by a foreign company which derives its value from assets located, such dividend will also be not taxable for the non-residents. நேச்சுரல் தானே, அவங்க இன்வெஸ்ட் பண்ணிருக்காங்க, ஏர்ன் பண்ணிருக்காங்க, அவங்க ஷேர் ஹோல்டர் கொடுக்குறாங்க. Anyhow their earning would have been taxable. Indian company in which they have invested, they would have given dividend to that foreign company. At that time, I would have taxed it. Foreign company now gives dividend to their investor. It is unfair though to tax it again. Okay. So these are business connections. These are business, these are income accruing or arising in India through business connection and capital gains தான் உங்களுக்கு you need to remember. Okay, otherwise it will be very simple. Okay, but significant economic presence is the new law. Okay, right? We continue tomorrow. We will start with fund manager tomorrow morning. All the best, friends.